What's up, y'all? Welcome back to the channel. Today we're going to be talking about what are index funds, types of index funds, examples of index funds. We're going to discuss some of the pros and cons of index funds. Before we get started, I just want to clarify that this is not financial advice. The opinions expressed here are solely my own and are for educational and entertainment purposes only. Investing involves risk. Past performance is no guarantee of future results. Please do your own research. With that being said, let's get into what an index fund actually is. An index fund, in the most simplest of terms, is a ETF or mutual fund that tracks a specific market index, and it tracks it by holding the exact number of stocks at the same percentages as the index. This thus tracks the performance of that index. Now we should ask, what is an index? An index is basically a collection of stocks that tracks a specific part of the market. So, for example, an index like the S&P 500. The S&P 500 tracks the 500 largest market cap weighted stocks in the United States. Another index like the Dow Jones Total Bond Market Fund tracks all the bonds in the market. So now let's talk about why you'd want to invest in an index fund and why index funds are so popular. There's three main reasons for this typically. Firstly is low cost. Because it's just tracking a pre-made index, they don't need to hire a fund manager. It's an entirely passive process, so they can have dirt cheap index prices. The VOO expense ratio is only 0.03% because it is an entirely passive fund. So it's very cheap to hold, as opposed to more actively managed ones, which can have expense ratios over 1%, which will definitely eat into your returns year after year. Secondly is diversification. When you're buying funds that track the S&P 500 or a total market index, you're buying hundreds or thousands of stocks, and it is extremely diversified, especially relative to just picking 10 or 20 stocks yourself. And lastly, it's simply easier. If you want to track, US tech, you can just buy a US tech fund instead of having to pick through each stock and assess if you want to buy it or not. You can simply leave the decision up to the market and let it market capitalization and the company's success weigh the percentage of the company in your portfolio. It's so much easier. So what are the things you can actually invest in via index funds? There's probably more than you actually think. Firstly, there's stocks. You can buy all the stocks in the US stock market if you wanted with one index fund. You could buy only small cap value or large cap growth. You could buy international stocks. You could simply buy every stock there is in the world with an index fund. One fund if you wanted, and it's so much easier. Kind of like stocks, there's also bonds. Any type of bonds. You can name you name it. Corporate bonds, treasury bonds, international bonds, short-term notes, or short-term bills, midterm notes, long-term bonds, all types of bonds if you want them. When it comes to real estate and commodities, these are typically assets that are highly expensive to invest in. But with ETFs, they're much more liquid because there's not a physical asset you have to go and sell to somebody. It's simply just trade like another stock. And they're investing in real estate. If I wanted to invest in real estate without an ETF, I could need hundreds of thousands, if not millions of dollars. But with an ETF, I can spend a couple $100 and get exposure. Same thing with commodities. If I want to invest in gold, I don't have to pay a premium on the price of gold at a bullion store. I can just trade a buy share of a gold ETF and be exposed to the price of gold or silver, or I can get in like agriculture. These two just make it much more easy and simpler and more cost effective to buy into these markets. All of these reasons are primarily why index funds are so popular and so widely used. I hope this video was of use to you, and thank you for watching to the end. Please comment any mistake I made or any question you have. Thank you so much.